So we think that any reversal in those allocations towards a more balanced, diversified global portfolio weightings would be beneficial for European equity performance going. And the classic factors, so value and size, have had a pretty long drought globally and in Europe as well. And some of that is starting to reverse, particularly the value factor, which is starting to deliver a positive premium in recent years. And we think, and that's coming from a very low base. So we think that there's significant room to run there as well. And within Europe, we see that valuations, the discounts are especially attractive amongst micro caps, as we'll show in subsequent slides. Right, so if we look at Europe versus the US, and specifically focusing at the median of each market, we find that some results that appear counterintuitive relative to the common narrative. Right. So again, measuring at the median, when you look at growth, so both in terms of trailing EBIT growth, the median European companies actually had better trailing 3-year EBIT growth than the median US company. And then in terms of analyst forecasts of where EBIT growth is likely to go over the next 3 years, in both regions, growth is expected to be higher, largely because the consumer spending was weaker during the recent inflation years. So with the recovery in consumer spending, there's an expectation of higher EBIT growth going forward.